I don't think it's a good time to be talking about BTC, unfortunately.
No, it has breached that 20,000 mark though of the last couple of days, but um, certainly the bears have been out of late.
Yeah, and unfortunately, everyone wants to talk about BTC when it's flying high. No one really wants to know about it at the lows, but it's good because I believe there is good opportunities at the moment.
Yeah, it's all about trading a range, and I guess the more volatile an instrument is, the harder it does get to be able to trade in a tight band where you've got reasonably high conviction around where your support level is and where your resistance level is. And if the band's too high, then that's where you can get stopped out before it hits the support, or if you're on the long side, and same on the short side. So it
That's
can
right.
make it harder.
That's right.
For those joining, we will be starting the webinar in a few minutes. We're just going to wait for a few more people to start to attend the webinar. And for all those attending, if you haven't already, uh, Fair Markets are proudly hosting, and Philip's been kind enough to uh, to provide a free FX bootcamp. It will be at Fair Markets office, which is level 26, 1 Bly, and that will be on the 15th of October. It's a Saturday from 9 o'clock to 12 o'clock. So it's for everyone who's enjoyed this webinar series. This live event is a must, and it's suitable for all levels of trading. Whether you are a beginner, Philip's going to give a firm and robust foundation. And it can be a refresher for intermediate traders. And then for intermediate traders, he's going to go through some trading strategies that have worked for him. And finally, in the last session, for the advanced traders, Philip's going to go through some techniques which have really worked for him for a risk management perspective, as well as a psychological perspective of how to stay in the game when you're trading, how to brush off a loss, to wipe the dirt off your shoulder, as Jay-Z would say, and when you're winning, to ensure that you check yourself and make sure that you don't have too much hubris. So I commend anyone who is free on the 15th, who is in Sydney, to definitely register for this event. It's a must-have.
And if you guys are interested, just contact either of us so we can give you a registration link and would love to see you there.
Excellent. Well, we might kick this off. For
Yeah.
those who don't know me, my name is James O'Neill, and I'm the country head of Fair Markets Trading. Um, Fair Markets are really proud and very privileged to have partnered with Opus Trading Group, and to work with an educator who is as great as Philip tonight. But before we start, just a few housekeeping. So this is general advice only and doesn't take into account any of your circumstances. All opinions provided by Opus Trading are Opus Trading's opinions and might not necessarily be the opinions of Fair Markets. And finally, trading on margin carries a high level of risk. So now we've got the housekeeping out of the way. what can I say? This has got to be a very exciting talk. We've seen the crypto market over the last year go from the ultimate bull to the meanest grizzly bear you've ever seen. We've seen Bitcoin at relatively historic lows, even dipping below 20,000 US dollars a coin. And we've seen a market which has been characteristically quite volatile and quite reactive. We've seen some coins which are no longer with us, such as Terra, and yeah, so I think there's some great trading opportunities, but it's also a asset that does have inherent risks, and so Philip's going to go through some technical analysis and some key considerations that all traders should and must take when they trade an asset class such as Bitcoin or any of the other cryptocurrencies. So without further ado, Philip, thank you.
Thanks a lot, James. I appreciate that. So, for those of you that don't know me, I'm Philip. If you haven't seen my work before, my trading, I mainly trade the GBP USD, which is also known as the cable, and I do trade BTC from time to time. However, I do keep very, very close eye on BTC, especially the technical analysis behind it, because I like to understand where the crypto market is going. So today what I'm going to be discussing is pretty much just BTC on its own, because if you guys are familiar with crypto, if you're not, BTC does generally have the overall, you could say, power behind the cryptocurrency market. So whichever direction you see BTC moving, generally speaking, the other cryptos will follow. So what I'm going to do is break down BTC for you guys today. And one interesting thing I wanted to actually tell you before I get started is a lot of YouTubers and a lot of people seem to be really, really focusing and talking about BTC when it's at all-time highs. And very few people actually talk about it when it's at the lows. And you guys should really be using these opportunities at the moment, because the people that make a lot of money out of cryptocurrency, and this is, I'm talking by your traditional investing, are usually the ones that get in early at the lows and exit at the top. Some do make money at the highs. However, as you can see, you'd much rather enter at a low and get out at a high. So technically, what we're looking at now is we are at these lows again. And now is the opportunities that we can be seeing. And I'm going to be showing you an analysis, technical analysis for both long-term projections and short-term projections on BTC. So I do also day trade BTC, which is provided on FairMarkets. So you are actually able to CFD trade BTC. For those of you who don't know, you don't just have to actually purchase the coins. You can actually day trade them just like you would do with FX. So now looking at BTC, the first thing I want to actually tell you is it is fractal. So for those of you who don't know what the term fractal actually means, it means it's a pattern that repeats itself. So if we're looking at BTC, or let's talk about something else, for example, if we are looking at a chart that is moving in an uptrend, for those of you who don't know what fractal is, I'll demonstrate it to you in this way. So let's say we have a daily time frame. So this is a daily time frame, the market's going up. Now, if we zoom in to this section and go on the hourly time frame, what we will see in that section is pretty much the exact same thing. And then if we zoom in to this section on a 5-minute time frame, we will see this, meaning the pattern is repeating itself over and over again, meaning it's fractal. So what do I mean by BTC is fractal? When you go back on BTC, it is pretty much creating the same pattern over and over again. So if I was to zoom in, to, let's say, the June of 2016. And we can go much further back on this. However, this chart in particular doesn't necessarily have the data. However, if we just go to June 2016, what we can see is BTC trading around 450, reaching a high of 770, dropping all the way back down and moving up. Now, if you look at this move right here, then now we go into. So this is the 17 boom. As you can see, we have a very similar sort of pattern that has occurred where the market has gone up, dropped around that 80%, you could say 80, 90%, and then started moving back up. And then if we finally go to the most recent boom, it is also looking fairly similar where we've hit a peak high and now we've dropped around that 80, 90%. So that's the first thing we've got to understand is that history is constantly repeating itself with BTC from what it's shown us. So this is all things that we can see on the charts. We can go and study it, study those historical movements in order to understand what may potentially happen in the future. So you might be wondering at the moment, what are these blue and yellow horizontal lines that I've got on my chart? This is something I want to share with you guys that I have discovered and that works extremely well with BTC. And you guys feel free to test it for yourselves. And I'm sure it's going to help you in your trading. So firstly, if we look at how I came to get those lines, is I found two key points on the monthly. So I'm just going to jump up to the monthly time frame. So I went to the monthly time frame and I found two main lines. So you got to remember this was back in 17 and I pretty much just, the chart was all the way back there, as you would imagine. So I found key highs. So I found the 14,000 mark. I rounded it off to 14,000. Then I found another key line, which was a support right here, and I rounded it off to 3,400. Then I found the midpoint of these two levels, and that was 8,700. So now I got 3,400, 8,700, 14K. Then I started plotting these equidistant levels all the way up. So I just kept going from 14K to 24,600, 35,200, and they are all equidistant from each other. So the blue horizontal lines, you could say, are my major key levels, and the orange lines in between are my minor key levels that are the midpoints. So now as the market started moving forward, what I want to do is just go back to the present time. And as we can see, the market moved to the upside. Now, it might not look like these levels were necessarily working along the way. However, we are on the monthly. So we've got to drop down in time frames in order to actually visually see what was happening. So as you can see in the bull market, the market will pretty much blow any key level, and that happens all the time. However, when we do take a break, you can see how these lines start becoming support and resistance areas that the market can travel in between. So ultimately, I found a way to discover how to find a range on BTC that will make it easier for us to start trading it. Now, if you'd also notice, the high that we hit of 60, which was almost 68,500, let's say USD, that key level that I plotted from the data generated in 2017 actually worked to a T in November 2021. And as you can see, so once we go down to the daily time frame, you are now able to see how these ranges actually work so smoothly. So we've got major key level, major key level. As you can see, we bounced up, came down towards the midpoint, bounced back up. That resistance level was there, came back down, found support. Then once we broke it, our next level to travel to was towards the next major key level. Then the minor became an area of resistance and the major became an area of support. And then the minor and the major. And as you can see, we started bouncing in between the major. So we've got that minor because the distance between the two majors is too great. So I needed a midpoint in order to help me with my day trading. So as you can see how nicely these areas are actually working, these ranges are actually working in order to help us in our day trades. So that brings me to where we are in the current time. So in current time, we are actually bouncing between the 19,300 mid minor key level and the 24,600s. 24,600 has been holding very, very strong. We've got the 19,300. As you can see, we've got the 14K major key level that can potentially be tapped. So now, I don't know how many of you actually watch my previous webinars. I do work a lot with liquidity and volume, and especially liquidity traps. So for those of you in here that don't know what the term liquidity trap is, it is when a market looks to grab orders. So the market is pretty much just a whole bunch of orders. We've got buy contracts and sell contracts. So anytime the market is looking to fulfill these contracts. So a liquidity grab is when the market is pretty much ranging and then it goes to in one way and then goes in the other. So that move right here is the liquidity trap in itself. And what that has done is it's knocked out so many players from their positions. It's taken them out. It's fulfilled the bigger players' positions at much better prices, you could say, in order for the market to make the move it actually needs. So if you haven't actually come across the term liquidity traps, I highly suggest you go on YouTube, jump on FairMarkets YouTube channel and rewatch my webinar that was specifically on liquidity traps and liquidity. So now what do I see in this current range? I see a potential for one of those liquidity traps. Why? Because we've got a key support over here that we have tapped into 1, 2, 3, 4, 5 times. The way I'm looking at it is there is so much orders building up beneath that area. There are so much early buyers that are saying BTC is going to go up, this area is holding, and they're entering and loading up all their buy positions from that point. So now what does that leave us with? It leaves us with a whole, you could say, liquidity pool of orders. We have so much stop orders, sell stops, so much people's stop losses that are placed within that region. So what is the potential that can happen? Well, we can potentially do this. And the reason for that is I'm seeing that liquidity pool. I'm seeing that orders are going to pretty much be dragged towards those areas in order to fulfill buyers at much better prices. The way I like to look at BTC is we are up against what they call the whales. So the whales are the people with very, very large pockets, and they're the people that can pretty much go in and out of BTC with a lot of money, and these type of moves are worth a lot of money to them. So even BTC going from 14K to 19K, you know, when you're talking with $50 million, $100 million, these moves are immense profits for these guys. So why would the big players or these whales want to enter their positions at these levels when they can grab them at even lower levels? That is my way of thinking behind why I think that liquidity grab can potentially happen. Also, it makes sense that we do have a support level over here, meaning that there are a whole bunch of orders sitting below there. Plus, we've got our key level, which is the 14K mark sitting right there. So everything, all these, you could say, confluences are lining up for me as to why the market can still dip further. Now, we obviously have to look at every potential scenario in trading because no one knows what is going to happen next. So what if the market doesn't dip, and where can it potentially go? Well, we've got the 24,600 barrier that we're going to go to first. If we do break that barrier that we can see we've tapped into 1, 2, 3 times, and we still haven't broke it. So if we do break it, the next time I would like to see somewhat of a retest, and then we can move into these next key levels. So these key levels are very, very nice in the sense of they can give you direction on BTC. They can help you visually see where you can expect or where you can see the price heading to next. Now, I wanted to show you guys another thing, and this is, it's a bit controversial. A lot of people think that it doesn't work. A lot of people think that it's a bit weird, you could say. And I actually do use planetary cycle dates to help me with BTC. And I'm going to plot them out for you, and I'll let you make your judgment as to if they work or not. So when the Earth orbits, there are 4 key dates in the year. There are what's called the solstices and the equinoxes. And these happen in March, June, September, and December, around the 20th to the 23rd of each of those months. Okay. What I also now use these, so I've got my horizontal lines. Now I'm going to have vertical lines. And you're going to see how I'm going to start having blocks on BTC and when I'm looking at my when I'm looking at the price. So let's go and plot the latest ones. So the latest one would have happened most recently at, let's say, September 20th, right there. Now we're going to look at the one previous. So the one previous would have been the June 20. So that would have been right there. So what I'm looking at on these dates, might go on the daily so we can just see it a little better, is I'm looking for a key low or a key high to form, and then the market to push in an opposite direction for the remainder of that quarter of those 3 months. So we've got the 20th of June here. If we look before that, we've got March 20th. Okay, so you can see in this zone right here, we created the key high for that particular quarter, and then the market was extremely bearish. In this latest one, the market was actually ranging. And we're just going to plot them, go back and plot them, and then I'm going to show you exactly what I look at when I'm doing this. So then we've got December 23. Once again, we created a key high that we never revisited. So that was a pretty, you could say, bearish quarter right there. September 22, created the low point, hit the high, came down. That was, you could say, a mixed quarter. However, you can see we never actually revisited that low from there. 22nd of June, very bullish. And you can pretty much go back and do this over and over again. And you'll notice that the market is actually moving in these kind of patterns over and over again. So that was here the June, and that was a pretty ranging, sorry, I put that wrong. That was meant to be June. So now I'm going to take it back to the weekly time frame and come back. And now you can see I've plotted all these areas on my chart, and I've got all these blocks that I'm pretty much trading within. So now if I look at the latest one, I was trading within a range. I know that I created, you could say, a low here. We then moved up to the high, and now I've got my key levels that I can refer to. So now the most recent one that has occurred is telling me one of two things. We are most likely going to create either a high and then go down, and we pretty much might not revisit it, or we're going to create the low, which may be that 14K mark, to then push higher. So these are the two things I'm also looking for. So what I've just shown you guys is high time frame breakdown of BTC. And this is crucial in order to help you see the bigger picture, because you need to understand the bigger picture on BTC in order to be able to trade those smaller type of moves. So when we move down to the smaller timeframes, and now we want to look at actually intraday trading BTC, I want to show you a little key tool that has actually helped me identify it. So if you go on your trading view and you click on the anchored VWAP. So VWAP stands for volume weighted average price, and you click that. you want to find key highs and key lows on your chart. So we know we've got a key high, let's say over here, and this is, I'm talking from an intraday perspective now. And we can put it from there. So what this is going to do, it's going to plot for you, similar to, you could say, moving averages. It's going to plot for you this average volume line that is indicated, that you can see illustrated by that blue line in the middle. And what this is going to tell you is this is the average volume, or where the orders were taken from this point onwards. So as you can see, the market has been trading, and these are on either side, these are called the bands. So what we can see is the market comes up, finds, you could say, like a dynamic resistance in the price before pushing back down. And this is like the average volume, which is the median. And that's where the market is pretty much going to go below it. And right now we are trading below it, meaning we are below the average price. So ultimately, when I'm day trading or looking for day trades on BTC, I could be looking for trades from the bands down into that middle average price, or from the lower band up into that average price. And now if we look at another, you could say, key point, which is that low right there, and we'll remove that one. What we can see is that the market actually respects that median volume. So as the market is traveling to the upside, and once we know that we have broken that average volume and broken to the upside, the market will come back and find some sort of a resistance, a dynamic support on that volume before pushing to the upside. So you can see how I'm adding all these confluences with my key levels, where we could have said the market hit that key level, we are above that average price, and it moved back towards the average volume. Once we broke below, found it as a dynamic resistance and pushed down to the lower band. And then vice versa, we hit that lower key level, and what did we do? We bounced from there up into, you can see on smaller time frames, that was a dynamic resistance that we found before going back up to the upside. Now, obviously, nothing is perfect in trading, so this is still considered, you could say, like a tap of that band before the price actually moved back down, and so on and so on. So this is a little tool. Obviously, there's a lot more to it. I would need a lot more than just one webinar to discuss exactly how I use the VWAP in my trading. However, it is a tool that I would actually tell you guys, give it a go, play around with it, see what you can come out, what you can create from it, because all you have to do is just find key highs, key lows on the BTC chart from a 4-hour, even 1-hour perspective, plot them up, use your key levels as your ranges, and then see if you can actually start improving your day trading in BTC. So that's pretty much it. I didn't have too much to discuss on BTC. It's my overall longer term view, which I discussed. That was the main aspect that I really wanted to break down for you guys, because I believe that everybody's talking about BTC at the highs. Very few people are talking about it at the lows. I actually see the lows as way more important than the highs. I've shown you guys the key levels, plotting them. So once again, all you have to do is just take 2 of my points and you'll be able to plot the rest. So if you just take 3,400 and 14K, deduct the 3,400 from 14, find your midpoint, and just draw equidistant horizontal lines all the way up. And then the solstices and the equinoxes, you can just find them online, find the dates for them, and these will help you find your quarters and help you find the overall direction that the market is moving in within that quarter. So that can break it down into quarters rather than having to look at a much bigger picture when looking at BTC. I really do hope that was very, very informative to you guys. I really hope you took a lot out of it. I'm more than happy to answer any of your questions that you have, or anything that didn't really make sense. So please feel free to write down your questions now, and I'm happy to answer them for you.
Speak now or forever hold your peace. Any last questions on trading BTC? Well, thank you. Oh, we have a question. It's more of a comment. Thanks for the great information. where can we find the recording of these webinars? So if you go onto FairMarkets YouTube channel, all these recordings are now on our YouTube channel. So please watch them again, like, subscribe. There's some really great content on our YouTube channel. Lots of it produced by Opes Trading Group, including Philip and Vian's excellent analysis on trading gold. And we've got some much more exciting and some more great content which will be up online, including much more of Philip. So once again, like and subscribe. This was another excellent webinar. Philip, thank you so much. We really appreciate your insight and your knowledge across so many different asset classes and how to trade. So thank you.
No, thank you for having me on here, and I really do hope that everyone is taking a lot out of this content. And if you do have any questions, guys, please feel free, even after the webinars, please feel free to reach out. I'm more than happy to answer any of your questions at any time. And I'm really hoping that I can impact your trading in a positive way, no matter how small or big.
Well, thank you so much, everyone. And if you're Sydney based, I hope everyone's staying dry. Thank you so much.
Thank you. Thanks,
Bye.
guys.